Good evening from London. The FTSE 100 index has recovered yesterday's losses to open 45 points higher at 7,073. It's largely helped by the confidence boost from shopping retailer Next and their better than expected set of interim results. The clothing chain saw its shares rise 3% higher at 8,302 pence, which is close to record levels seen earlier in the summer. JD Sports Fashion also benefited with a gain of 22 pence, while AstraZeneca joined the risers board with a gain of 2%. Worries over whether the impact of the fuel crisis is contributing to an outlook of low growth and rising prices has left the pound at its lowest point against the US dollar since January. Sterling held firm this morning at 1.35 against the US dollar, having fallen 1%. The pound's weakness was blamed on stagflation or recession inflation fears triggered by the fuel crisis and as rising US borrowing costs put upward pressure on the greenback. The 10-year Treasury yield rose 1.5% on expectations for an earlier than expected rise in interest rates, leading to sharp sell-off in tech shares whose valuations are built on future strong cash flows. Japan and South Korea led falls in Asian markets on Wednesday, with Tokyo's Nikkei 225 dropping 1.2%, while the Kospi lost 1.3%. Hong Kong's Hang Seng index was flat and China's CSI 300 fell 0.5%. In currencies, the yen briefly touched its lowest level since March 2020 against the dollar, ahead of the selection of Japan's new prime minister by members of the ruling Liberal Democratic Party later today. The Japanese currency was steady. And the Chinese property giant Evergrande has said it is selling a $1.5 billion stake it owns in a commercial bank as it scrambles to raise money owed to customers, investors and suppliers. The almost 20% stake in Shenjing Bank is being bought by a state-owned asset management company. It comes after Evergrande missed a bond interest payment last week. The cash-strapped company also faces a deadline today for another bond interest payment of $47.5 million. And those are your main stories from London at close of business.